is the stock market crashing? Is it crash time for the market? Who knows? But what we do know is that the market definitely dropped today, and it dropped a great deal. Roughly, we'll take a look at it right here. We can just look at SPY and kind of see where it's at this point. But we see the market, it was up in the green earlier today. Then right here when Jay Powell, the Fed Chairman, started speaking, and he lowered the interest rate, but called for lessening the lowering of this rate, you see it just took a dive here. So a straight deep dive down there in the S&P. And so it was down -2, almost -3% today overall. So I don't believe the market is crashing. We're in a time right now where we're rebalancing. This December, you're going to do the rebalancing. You're going to sell off the things a lot of investors are selling off where they're taking a loss on. They're repositioning themselves to buy back into some of the same investments or in different investments going into 2025. Also, you have people that sell during the holidays at any rate so that they can go take their vacations, enjoy some money, take some of their profits, enjoy the profits that they've made throughout the year, and use it during this Christmas time, vacation time. Now, the Santa rally we talked about a while ago, will that still even happen? It's a possibility. It usually happens toward the last week of December and into the first week of January of the next year. That can still take place. We're not really sure at this point. But what I would say to this is a good buying opportunity. Many of the stocks that I am into and that some of you are into, such as Nvidia, which was kind of up today for the first time in a while after its pullback. But of course, you'll see that it went down. Now you see after hours, it's in an upward movement at this point, and it went down here as low as 127.19. And it's on its way back up. So what I definitely think is that it's a good time to just continue to dollar cost average, buy over time into Nvidia, which is one of my usually main holdings. I do put stop losses. We've talked about that. Put stop losses on the major holdings. And I may put it at a 15% trailing stop, which means as the market goes up, or the particular stock or ETF goes up, then if it drops 15%, it'll sell out whatever number of shares I put in there for it to sell out, which means I'll lock in profit usually. So if a stock, for instance, say Nvidia is up, say whatever. So we look at Nvidia over year to date. Year to date, Nvidia is up 166%, as you see over here. So if I have a 15 or a 25% stop loss on that, then when the stock pulls back, say it pulls back that 15, 20 or 25%, whatever I choose to put the stop loss at, and whatever you choose to put it at, then it will trigger a sell out at that rate. And so even at we'll just say a 10%, we'll say for round numbers, a 10% pullback. Well, 10% pullback would be roughly $13, which down here would roughly knock off about another 16. Well, 10% would knock off, bring it down 10% here, and you would actually capture, instead of 166%, you'd still capture about 150% profit, even on the pullback. And then you can decide where you want to go back in that stock or how much you want to start dollar cost averaging in if you figure it's still a good stock and want to go in it some more. So we see that most of these stocks have pulled back today. And like I said, this month you're going to have some volatility. It's going to be choppy. SoFi is down 7, almost 8% today after the pullback. Another big one, huge one that most people, a lot of people that are into, and as well as myself, Palantir. Palantir is one of my main holdings. As you see, it pulled back, not bad, almost 2% down today. But look here, it was as high as 77.57, and now it's down to $73 a share. So that's a good, I would say it's a good entry point for me. You have to decide for yourself. And you want to keep you some dry powder. What that basically does is when you hear people talk about dry powder, you do have some people that are sitting back on quite a bit of cash in their accounts. I usually don't do that. I'm almost pretty much 90% invested from time to time. But what I will do is if I find something that I really like or a trade that I want to get into, we're in brokerless, commission-free accounts anyway. So you can have something that's not moving so fast and just sell out of it. You sell out of it, buy into whatever it is you're attempting to buy into, and then just attempt to ride it up from there. Or if it's an option trade, you're in and out, quick trade, longer trade, whatever. But you're anticipating to make a greater return off that money that would be just sitting, not earning so much in the first place in the other investment. So we see Tesla took a deep dive today. Another thing to keep in mind with these stocks pulling back is that many of these have been running hot. They've been running very hot, running up in the stratosphere. And whatever goes up, we know the law of gravity, it must come down at some point. And so why not December, where we're rebalancing? There's a trigger of people selling, the trigger of Jay Powell giving his speech today, which the market obviously didn't care for very much because it went straight down instead of going up. But this is the world of investing, and we're long-term investors, so don't panic. Put your trailing stops on, or if you're monitoring your account quite a bit, just decide where you want to sell out a certain amount. If you're up a great deal, you may want to take some profits out and see if there's going to be something that pretty much bottoms out where you want to start investing in that.